Welcome to this India Market Review by Bangalore Investors Club. This is Dr. Musa speaking on the session, and we are going to continue where we left off last week on Friday 23rd, and this is the evening of 30th June, Friday 30th June 2017. Last week we had said that we are expecting at least a correction in the Indian stock market, and that is exactly what happened. The Nifty has corrected by around 200 points since we spoke, and the question right now is that the long-term uptrend that has been quite strong and active in the Indian markets for many months now, is that anything to be worried about, or is this just a temporary correction and the uptrend is basically intact? That is what we're going to discuss in part 1 of the IMR, and we're going to look at global indices and the Indian sector indices. In the later session, which will be a separate webinar, we are going to look at the Nifty Next stocks, the 50 stocks in the Nifty Next index. We will also do a quick review of some of the Nifty 50 stocks, which we had specifically pointed out in the last week's IMR, see what happened, and then we will continue and look at the Nifty Next stocks, right? All right, so without any further ado, let's jump into the global markets first and look at how they are faring. And as you can see from this chart, this is the Dow Jones index, and the Dow Jones index certainly seems to have made a top for now, and looks like it is looking at testing 21,200. As you can see on the yellow line there on the left here, it has basically come to that support level. The volumes are slightly increasing. MACD negative crossover has happened, and there has been, as we already noted earlier, bearish divergence going on the index for some time. So this has not yet become a downtrend by any means, but definitely for now there's a temporary halt to the uptrend in the Dow Jones index. Looking at the S&P 500, more or less the same picture as you can see, so there's really nothing more to say. Going over to Europe, starting with Germany. So DAX clearly is now going down, has corrected, and this big strong red candle, the Marubozu candle, there's something missing in the volume data here, right? And looks like at least another few 100-point downside on the German DAX is certainly possible. Maybe it will all the way go back to 12,000 at least. So that's about a 4% correction that is seeming very likely at this point. Looking at FTSE, and well, as you can see, the FTSE has come back to its previous old life high. And one more thing that the FTSE has done is that come to this trend line or thereabouts, and it'd be really interesting to see what happens going forward from this place. Right, so at a good support level, that's for sure, and whether the support holds or not, that really is the question. If the FTSE does break this support, there's a horizontal support plus a trend line support, which looks a little bit of a challenge right now, but 7100, first of all 7200, then 7100 on the FTSE is distinctly possible. Looking at France now, that's clearly broken some good support and is most likely headed down. So as we mentioned in the last week's session, there's really nothing in the markets that are particularly, how shall I say this, bullish, right? We had mentioned that the global markets last week were sort of bearish mood, and I think this bearish mood has aggravated or become stronger in the week that has gone by. Looking at Nikkei, Right, surprise, surprise. So the Nikkei clearly has, held up. So that's definitely one exception. However, it has held up with, small candles, nothing substantial, no big moves, could be going up. And as a matter of fact, interesting. Okay, let's put this, if I put these trend lines, then I hope you recognize the pattern that you're seeing. This is a rising wedge, right? Rising wedges usually tend to end badly in the sense that, you know, uh, the market tends to fall down once the lower boundary of that edge is broken decisively, right? So Nikkei also sort of heading the bearish way by the looks of it, right? So that is on the global indices. Coming to Nifty, right? Sorry, NSE 50. So first off, right, we've been having this bearish divergence for about 4 months now. Is it possible that the bearish divergence is now coming in play, and we've got rising volumes on the downside, and well, you had this neckline which got broken. This was a neckline that we had put last week, and as you can see, quite decisively broken on Wednesday, Thursday, Friday. 50-day moving average has provided support now for the market as of now, and it will really be interesting to see what the next move on the Nifty will be. Right now, if just going by traditional Dow theory, we've got a resistance just about 50, 100 points above, and then after that, does it resume its down trend? That would be really the question. Big event tonight in India, 30th June, midnight. The old indirect taxation system comes to an end, and the GST system comes into play. There's a big function in the parliament. First time there's a midnight session that's being held apparently after 1947 is what I heard. I'm not sure, but obviously a very significant move in India. It's been in the works for 17 years after it was initially touted, and we'll have to see how this pans out. There are some concerns now about whether this will roll out as smoothly as the government has been saying, and if it does not, then some hiccups are expected, and whether that will impact the stock market or not, I think time is going to tell in the next, I guess, in the next couple of weeks or few weeks for sure. Right, so that could be another, a bit of a, it could be a positive surprise, it could be a negative surprise, but I'm just saying, just watch out for that news. It's a massive, huge development that's going on. All right, so Nifty very critically poised. Any upside move can only be considered after it crosses 9,600 in a decisive fashion. It's got a lot of resistances sitting there. So another 100 point, 80 to 100 point up move, and only after that can we be confident that it could go back up. And even then, 9,700 is going to probably remain a formidable resistance for now. On the other hand, once 9450 gets taken out, then Nifty is certainly going to 9360. So it's a sort of, I wouldn't say no man's land, but I would be more inclined to thinking that we've got potentially a down move that is in the works. Looking at the weekly chart, you can see that the last 3 weeks have really been bearish. There's been a pretty decent run up from 8,000 to 9,700 without any meaningful correction, and maybe this is the beginning of that, though it is really early to say. Putting stop losses on your longs would be very, very much warranted, and to get out at the earliest sign of trouble. Monthly chart on the Nifty, usually we don't see this, but you're seeing a red candle after 1, 2, 3, 4, 5 months of seeing green candles on the Nifty chart. So maybe just another hint, but on the other hand, just to invite your attention to what happened here went up 1, 2, I'll ignore this for now, 1, 2, 3, 4, 5, 6, small spinning top, doji, and then continued to go up. So it's not the end of the story, but it'll be interesting to see. So it looks like July is definitely going to be an interesting month, of course, on account of many events, GST and also the monsoon impact. All right. So that's the view on the Nifty. Longs only above 9600, decisive breakout up move, and definitely a short if it comes to somewhere around 9550, let's say, faces resistance, is not able to move up, and then that'll be a good place, a low risk place for shorting, and then 9400 is definitely a distinct possibility. Please note that the Nifty could correct all the way to 9,000 in my opinion and still not break the uptrend, right? So another a 500 to 600 point down move on the Nifty, which is almost 10%, about 8% is I think entirely possible without the long-term uptrend being broken. So the question we started out, is this the beginning of a bear market? Well, the answer is definitely we don't know. It could be, but that's always a decision in hindsight. What one should be doing right now is definitely protecting longs, and if they go below a certain level, one should, without second thoughts, exit your long positions on a case-by-case basis. If you are on a stock-by-stock basis, if you are looking at Nifty itself, yes, there's definitely a top in place right now. All right. So let's look at the broader market, and let's look at the Nifty Next 50. Well, like we mentioned last week itself, this had already made a lower top. We don't have a lower bottom, but now this is, really pivoting around its 50-day moving average, and we'll have to see how this goes. The upper Bollinger Band has clearly, started turning down, and the band itself is at best sideways. It's not showing anything bullish at this point. Though the Bollinger Band in Nifty is still showing some bullishness, the Nifty Junior or the Nifty Next is showing a sideways, likely sideways move. But it's too early. We'll have to again wait and watch and see what happens with that. Right? Okay. Right. One second. Okay. Power cord had become loose. Just fix that. All right. So that's the Nifty Next. Looking at the broad market, this is the CNX 500 index, and that's also looking at the 50-day moving average. So it's interesting. So all the three major indices right now looking to see what they want to do around the 50-day moving average, right? So we'll have to, I guess, just wait and watch. Really nothing much else that we can do about that. All right. If these 50-day moving averages break, then certainly I think further downsides are very, very likely. Next, looking at the sectoral indices, starting with the Bank Nifty, not in any particular order actually. So that's, I think, very clearly now showing weakness. On the weekly chart, you have a evening star right now. On a monthly chart, we have another doji we've seen before on the Nifty. So weekly chart on the Bank Nifty showing clear bearishness, and any upside only above 23,500. Otherwise, this is looking for now weak. I think 22,000, 23,000 will be a level to watch out for. Does it hold? Does it break? Or what does it decide to do there? And then we'll look at this level at around 22,600 in the week ahead or weeks ahead, I would think. Right. All right. So Bank Nifty, more downside, I think. Looking at the PSU Bank Index, so that's really broken down in the week that's gone by. We were clearly mentioning about this, fall that had happened earlier, how it was taking this support last week, and you can see that that support band, which we have been referring to for quite a long time now, since it's 2012, if you notice, 2012 to now. So it's a good 6-year band that we are talking about, and that has now clearly broken to that. And this was the weakest index, if I remember correctly, last week. And on top of that, this 200-day moving average has been broken. It's come to one more support below, and it'll be interesting to see whether that holds or not, 3,300, or whether it breaks down and goes maybe all the way to 3,000 or even lower. Right, so for now, PSU Bank Nifty weekly chart definitely not looking good. Strong downtrends in the making, and on the monthly chart, after many months, or almost after 1.5 years, we are actually seeing red candles on the banks, right? So short looks like that's the story of the banking space, definitely the PSU banking space, and definitely even the bank nifty overall having turned negative. This is not a healthy sign, or it's a bearish sign. Healthy, not healthy, matter of opinion. All right, so moving on, looking at, let's say, FMCG. Wow, so this is really interesting. FMCG, this has shot up, made a new life high, massive new up move. So the FMCG place really looking bullish. We'll have to see what caused this up move, which stock. It will usually be ITC or HUL or one of those. And looks like, I don't know, the traditional logic would be that, the monsoons have been good, and that's good for the rural economy, and the FMCG sector tends to do well if that is the case. So let's see, it can be a mixed bag, but definitely to be quite honest, I am surprised to look at. I'm now clearly obviously biased towards uh, a bearish view. All right, infra index, so that's clearly just going sideways, and I think setting itself up for lower tops, lower bottoms, and it'll suddenly just fall off a cliff, and then could just be at 3050 in a blink of an eye, literally. So we'll have to see how that pans out. All right, next, looking at I'll come to IT later. Looking at pharma index. This made an impressive recovery, obviously, right? So be interesting to see, has the multi-year downtrend, 2-year downtrend in the pharma index, is it, has it taken really good long-term support, or is this just a temporary up move, up correction before the downtrend continues? As a matter of fact, if we just take this and extrapolate, which we'll just keep on the chart for future reference, it will be interesting to see what happens to that line and whether it is able to break out or not. So pharma looking bullish for now, bullish in the short term, but still very, very much bearish in the long term. If you look at the long-term moving averages, right? Okay, looking at realty, or let's look at realty in the long term. Right, so that's clearly topped out also, right? So realty has topped out. Right, realty has clearly topped out, and there's a very, very clear top in place on realty. Until that top is taken out, I think no further upside should be looked forward to. So realty could fall about 100, 200 points, I think. Right. So could we look at realty coming to all the way 1900 or maybe even 1800? Definitely the bulls are weak and the bears are strong. You can see that by the size of the green or red candles respectively. And Yep, the balance has definitely shifted in favor of the bears as far as the realty index is concerned. Looking at the metal index, right? So that's trying to go back up, but I'm really wondering whether it'll be able to really break out and go up there. You can see as soon as it comes to around those levels at 11,500, there seems to be a lot of upper shadows on all the candles at that range in that price zone, and we have it basically stuck between 11,500 on the upper side and 10,800 on the lower side. Until that conflict resolves, there is really nothing else that we can do. We just have to wait and see which way this goes. Right, so metals are in a iffy place. Capital goods, right, so that was already down, going down further this week, and well, we have a small hammer, and this time on the 100-day moving average. So long-term moving average is also getting broken one by one, week by week. So the downtrend definitely seems to be getting stronger. Yeah, 2 months of red candles on the capital goods index. That's right, something to watch out for. Not the end of the bull market right now in that sense, but still, is that 2 year sort of long-term consolidation that we are seeing? Of course, it's a very deep one, and then will it break out of that, or is this just is it the start of a deeper downtrend, something like this from 18,000 to 11,000? That's pretty good cut. We'll have to wait and watch, right? So okay, let's see. Okay, all right, so this is also for now bearish, but at a good support level. Wouldn't be that eager to short it. It's not as eager as, let's say, not the, what was that, the reality index, not the, yeah. Okay, sorry, I just tracking my thoughts. The capital good index. So I was basically talking about this versus the sorry, daily versus weekly, right? Right. So this, in terms of daily, has gone to the 100-day moving average, and this is that other top that we're talking about here. And when you make that into the weekly chart, that's how it actually looks like, right? So what I'm saying is that from a multi-year perspective, this downtrend, I'm sorry, the uptrend is not over. It may just be a correction, and then we see the capital goods index go up. But from a short-term perspective, in terms of a daily chart and that, then a little bit more circumspect. It could be that this hammer holds and we see an morning star, or it could be that we see a red candle on Monday, Tuesday, in which case it'll probably go down lower. So overall, in the next 1 or 2 weeks looks more like a downtrend than an uptrend. Coming to the IT index, so that's also fallen, and as you can see, it's fallen below that uptrend line. So obviously nothing very healthy out here right now. It has fallen, broken through the downtrend, and is possibly maybe headed lower. However, are we perhaps looking at it's too early to say, but there could be a bullish divergence. Okay, I won't say anything because it's not yet there. We'll wait and watch. All right. So the overall view is, I think, apart from FMCG, everything else is in a short-term downtrend for sure, and looks like that this downtrend is getting accelerated. It'll really be critical what probably happens in the coming week. You already have the bank Nifty showing bearishness. Oh wait, we didn't see the auto. I was wondering. Yes, there we are. The auto index. So again, that's clearly topped out. It's come to its previous life high. Now the question is whether this is going to hold or not. Now by the looks of it, simply if I do that, then all right, so there is your weekly chart and there is the monthly chart. So monthly chart looking very bullish, weekly chart definitely looking bearish, and daily chart bearish, bearish, bearish all the way. Quite possible that this is going to break that old high and then I think go down to maybe 23,000 or even to 22,400. So the uptrend in the auto space also getting weaker. So apart from FMCG, and again I think that's a mixed bag there, and maybe healthcare. Where is that? Yeah, which is showing perhaps some recovery, but then you will have to confirm that with individual stocks. All other sector indices are clearly bearish. And to that extent, I think having any bullish perspectives is probably not true, not good. So have stop losses on your long positions and be prepared to short. There's probably some good money to be made in the coming days and weeks. All right. So with that, we come to the end of part 1 of this IMR. We'll stop the session here and I'll be sending a fresh link to review the Nifty next stocks, right? So thank you and see you on the other side.